Welcome to Real Estate Radio Power Investing, an informative and engaging hour discussing everything you need to know about the world of real estate investing. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate Radio Power Investing, Tom K. Wilson.
Thanks so much for tuning in to our Real Estate Power Investing program, where we empower you with the education to maximize your investing success. We're broadcasting from the #1 business radio station in the San Francisco Bay Area, KDOW AM 1220, the Wall Street Business Network. I'm Tom K. Wilson, your host for the weekly program on real estate investing. If you can't make the live show, you can catch your podcast on TomWilsonProperties.com or on iTunes or on YouTube. And we invite you to go to TomWilsonProperties.com and sign up for our weekly newsletter that includes economics news information as it applies to real estate. Also, if you sign up, then you become part of our client base, which allows you to have access to many products that are only available to our client base, such as commercial syndication products. Today we have a very special guest on, Peter Schiff, whom I've had the pleasure of knowing for several years. Peter Schiff has a degree in finance and accounting from UC Berkeley in 1987. He's the president and chair of 3 financial products companies. He's an economist, author of books, frequent guest on TV and radio shows, and one of the few that called the 2008 and 2007 crash right on for the right reason. So, Peter, welcome to the program.
Thanks for having me on your program.
It's always a pleasure to see you, and you've been one of those few economists that called the crash right, and that's how you met the real estate guys. They said, we want to learn more about history so that we can predict the future and protect ourselves financially. This problem of that we've got right now is not a new one in history, is it? We've had a lot of empires that once again went off standards of such as gold and went to fiat money, got in trouble.
Yeah, well, history is replete with examples of countries that have fallen from power as a result of too much debt, debasing the currency. It was going on long before we had paper money. Right? One of the things that the Romans did was they debased. That's where the word comes from. You take the gold out of your money and you put base metals in there. So they did that because of all their spending. The government was spending a lot of money. They couldn't collect enough taxes, so they debased the currency, and they had inflation, obviously, because prices rise because now you had more currency because it wasn't all made out of gold. But all empires have collapsed, and I think the U.S. is no exception. I mean, we fall victim to the same mistakes. The government makes all sorts of promises to the people because the people elect the politicians, and so the politicians care more about their reelection than the economic, future of the nation, and so they sacrifice the future so that they can keep getting elected to their. And here we are. We're about to experience the consequences of this. The conventional wisdom is that the Fed solved the problems that the market created that led to the financial crisis. Well, the market didn't create the problems. The Fed created the problems. And everything the Fed has done since to solve the problems has actually made the problems worse. And we're about to find out just how bad those problems are, I think, relatively soon. And
raising the rates is largely, you think, sandbagging, so that they have something left to use as a tool once we get in bigger trouble?
Well, I think the only reason the Fed has raised rates in light of weak economic data is to try to pretend that the economy is stronger than it actually is, and to try to show the markets that they can raise rates, even though they really can't, because of the enormity of the debt. In fact, that's the reason that we can't really have any tax cuts. Everybody's looking forward to these big tax cuts, but we can't afford them, not unless we're going to have massive cuts to government spending. But government spending is increasing. Nobody is talking about cutting spending. Spending is going to increase we already have a large deficit with taxes the way they are. If we reduce taxes and continue to spend more, the deficit goes up. And, of course, interest rates have already been rising, and that makes the debt that much more expensive to carry. And, of course, since the government doesn't have the revenue to pay the extra interest costs, well, it has to borrow that too. So the deficit is rising as a result of rising interest rates, and it will rise further as a result of increased spending and reductions in taxes. So I think we're headed for a debt time bomb. I think ultimately we're going to see a collapse in the value of the dollar as the Federal Reserve tries to prevent interest rates from rising by printing more money and tries to artificially prop up overpriced stock market, bond market, real estate market, and tries to stimulate us out of this next recession. But they're going to, sedate us into the next depression.
Now, when you wrote the book Crash Proof, many people thought, well, he was right, and we've had that crash, and so now on we go. But you've indicated that was not really the crash you predicted. It was really just foreplay, right?
Yeah, the 2008 financial crisis, the bursting of the housing bubble, and the consequences of that was what I wrote was going to be the first step in the process. That was going to set in motion a set of policies that would lead to a real crash. That's what I thought. I thought we would have the bursting of the housing bubble. That would give us the worst recession since the Great Depression.
Which it was.
We would have double-digit unemployment and trillion-dollar deficits. All those things happened. I wrote about banks failing, Fannie Mae and Freddie Mac going bankrupt. All that stuff happened. But then I wrote, because of that, the Fed was going to try to stimulate the economy out of that Great Recession with more of the same types of monetary policy that caused it. Only this time it would have to be much bigger because the scale of the problems would be much bigger. And I wrote that as a result of all that cheap money policy, that was going to produce a crash in the dollar, and that was going to collapse the economy. That is the only piece of the puzzle that hasn't happened yet. And what I didn't anticipate, and I never really tried to time it, I never put a time period on how much time would transpire between the government basically injecting the economy with that lethal dose of stimulus and the death of the dollar. I didn't know how long the lag would be. I am very surprised now in hindsight that it's been this long. Right? I wouldn't, if you had asked me when I was writing that book, and you said, hey, Peter, all of your predictions are going to come true about the housing collapse and about the financial crisis. Everything is going to happen, and it's all going to happen in 2008. Because remember, when I wrote the book, it was mainly 2005, 2006. So I didn't really know when it was going to start. But if you'd have told me every single thing that you say is going to happen in 2008, where do you think, what do you think is going to, when do you think the dollar's going to collapse? There's no way I would have said 2016 or 2017 or 2018. So I am surprised now looking back that it is taking so long. But what I am sure of is because it's taking this long, the problems are now much bigger. The economy is much more screwed up than I ever thought it could possibly get because of how long it's taken. Because the collapse would actually usher in the reforms that we need to rebuild a viable economy. But because we've been able to go so much deeper into debt, because the national debt has allowed to double again without any repercussions. If the dollar had collapsed 5 or 6 years ago, that would have put an end to the borrowing, but it didn't happen. And so now we've dug ourselves into a hole much deeper than any hole that I really thought possible when I first wrote that book. And so the need to be protected from the crash is greater than ever because the crash is going to be bigger than ever. The good news is here it is in 2017, and people listening to this program, they still have time to protect themselves. They can still sell the Dow at near 21,000. They can sell the Dow. They can sell the dollar, even though today it's at a 6-month low, but it's still pretty close to a 14, 15-year high. They can sell their overpriced stock. They can sell their overvalued dollars, and they send money to me, and they can invest their money abroad, take advantage of the expensive dollar to buy assets in Singapore, Switzerland, New Zealand, Norway, Hong Kong, places like that, put money into gold, get gold stocks, so that you're positioned to not only protect your wealth, but profit when the air comes out of this bubble.
When it was a great pleasure to bring Doug Duncan on board this year and introduce you to him. And I think you, among many others, were surprised to find and pleasantly that he wasn't just giving Capitol Hill lip service; that he acknowledged that this is the longest and weakest expansion that we've had, and that he feels we're at high risk as well.
Yeah, the media is touting. There's a report out today that shows that the level of household debt has finally surpassed the level of household debt from 2008 before the crisis. But the media is downplaying it because they're saying, oh, the economy is in better shape now than it was then. No, it's not. It's in worse shape. And what people are not even pointing out is that if you look at mortgage debt, right, mortgage debt is actually lower today than it was in 2008, yet household debt is higher. How is that possible? It's because credit card debt, auto loans, and student loans are off the charts. And if you go 2008, yes, the average household had mortgage debt, but that meant they also had a house, and that house had equity. And for most people, the home equity, exceeded the margin debt, or the value of the house exceeded the mortgage, and so they had an asset. They had, that was part of their net worth. Well, today, home ownership is at a 60-year low, and so yes, those households that are no longer homeowners, but they are renters, they no longer have any mortgage debt, but they also no longer have any home equity. What they do have is rent that they have to pay every year, and rent is going up. Meanwhile, they have credit card debt through the roof, auto loans, student loans. So if you look at the typical American household today and you look at their net worth, right, their assets minus liabilities, they are in much worse shape than they were in 2008. Plus, a lot of people that had full-time jobs in 2008 now only have a part-time job. So they have fewer assets, more liabilities, and their income is lower. I mean, this is a huge disaster.
So you wrote a subsequent book called The Real Crash, right, which details a little bit more about how the worst hasn't really happened yet.
No, the worst has been covered up. I'm here at this conference. Ben Bernanke speaking today. He's touting his paperback now of The Courage to Act. But these central bankers were confident that what they did saved us. Right? They pulled us. They didn't. They just sealed our fate. They had an opportunity to do the right thing, but they chickened out. Right? It wasn't the coward's way out. It was, it wasn't. It was the coward's way out. Right? Not the courage to act. And we're all going to have to suffer the consequences of Bernanke's cowardice.
So is he trying to promote that he really did the best we could do at the time, or? That's
what he thinks. Yellen is continuing that playbook. The only central banker who is sort of acknowledging the problems is now Alan Greenspan. Greenspan comes out now and he talks about stagflation. The economy is weak. Inflation is picking up. He's telling people to buy gold. So, he doesn't want to criticize his, said to other central bankers because, when you live in a glass house, you're not supposed to throw stones. Right. But, he is talking about the problems going forward, even if he's not blaming the central bank.
Peter, we got to take a break here. More from Peter Schiff when we come back. Got Peter Schiff on the program today, and we're talking about the economy. Stay with us. We'll be right back.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Got Peter Schiff on with us today, chair of 3 financial products companies, economist, author, frequent radio show host, and frequent guest. Peter, to those who say, well, all this I see is sounds kind of bad, but as long as we're as Doug Duncan says, the best looking horse outside the glue factory, and as long as we're not as bad as or any worse than other economies on a relative basis, we'll probably come out okay and can keep kicking the can down the road. You say what?
Well, I don't believe that. I think it's all a matter of perception, and perception can change very quickly, when it runs into reality that is different. It's like the emperor has no clothes, right? I mean, there are a lot of people that can say, oh, look at the emperor, right? Oh, he looks, that's a wonderful outfit, even though nobody sees it until somebody finally has the courage to stand out and say, no, I don't see the clothes. And so I think the same thing happens with the United States. I think we are in worse shape than just about any other major economy in the world. I mean, certainly, you can look at other countries like, Venezuela and say, okay, we're not as bad as them, right? Or Zimbabwe. I mean, so we're not the worst country, but if you want to compare us to other major economies that people can invest in, we are in much worse shape. I mean, we are the world's biggest debtor nation. In fact, if you took the debt of all the other debtor nations and added it together, we still more than they do. So we have this massive bubble. We have these huge trade deficits and current account deficits that no other country has. We're completely dependent on borrowed money and the kindness of strangers. I mean, our economy is based on our ability to con people into selling us stuff for nothing.
How concerned?
The world sends us stuff, and we just give them IOUs. So the reason that our economy appears okay is because we can keep borrowing more money and spending it. But look at Puerto Rico. I'm living in Puerto Rico. Puerto Rico just declared bankruptcy. Everybody knows Puerto Rico's a disaster. But 3 or 4 years ago, nobody talked about the problems in Puerto Rico, but they were just as big. It's just that they were able to cover up the problems by going deeper into debt. But the reality was they were broke years ago, but the creditors were too dumb to figure it out. They just kept loaning them more money. So as long as they could spend that borrowed money, they could keep the wolves at bay. So the reason that the U.S. economy appears to be in better shape is because we can keep spending more borrowed money. But we can't pay any of it back. And when our creditors figure it out, the party comes to an abrupt end.
And what will that look like?
Well, I think it's going to be a dollar crisis because I don't think that our politicians have the guts to default, right? I mean, that's what Puerto Rico is talking about doing, defaulting, where the bondholders don't get their money back because Puerto Rico doesn't have a printing press. They don't have their own central bank, right? And they can't print money, but we can. And so rather than defaulting, we're just going to start printing money to buy all the bonds that nobody else wants because they realize that they're not going to get repaid in real purchasing power because money is going to lose value. And the bottom is going to drop out of the dollar, and then inflation is going to skyrocket. It's already at a 5-year high. And so eventually, though, in order to stop hyperinflation from happening, in order to put a floor beneath the dollar so we don't turn our money into monopoly money, the Fed is going to be forced to eventually let interest rates skyrocket, and then everything is going to collapse. But before then, people need to take advantage of what's about to happen, right? Because most people were blindsided by the 2008 financial crisis in the real estate market. Well, this crisis is going to blindside even more people. And so much about real estate, because if the dollar collapses, obviously, real estate could rise in dollar terms. And in fact, to the extent that you have debt on your real estate, it's the lender who ends up getting screwed, not the debtor. If you have a mortgage on a piece of property and at least you got a fixed rate where the rate can't go up and the dollar collapses and inflation goes through the roof, that's a transfer of wealth from the guy who loaned money to the guy who borrowed it to buy a real asset. But the assets that are going to move up the most are going to be international assets in other countries, like in New Zealand or Singapore or Hong Kong or Norway or some other country. Those assets are going to rise dramatically, as will the price of gold and the value of gold mining stocks. So to the extent that you have a portfolio, you need to take advantage of this opportunity now. And that's what we're doing with our clients at Euro Pacific Capital. We build portfolios outside the U.S. dollar so that people can preserve their wealth and profit from this coming crisis in a way similar to the way I profited and others profited by shorting the subprime market to take advantage of the ignorance that existed at that time to the housing bubble. This is an even bigger bubble. Even more investors are going to be blindsided by what happens. But a few people are going to make a lot of money because they could see clearly what others were blind to.
All right. So, well, excuse me, Peter. When you come back from the break, we'll learn more about what you can do individually to help protect yourself from the impending crash. I got Peter Schiff on, who is an economist, author, president of Euro Pacific, and 2 other financial companies that we'll talk about in a moment. Stay with us here on KDOW 1220 AM, the Real Estate Radio Power Investing Program.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Peter Schiff, financial products entrepreneur, author, radio show host who called the crash correctly and is telling us that that's not the whole and not the real crash. So, Peter, we have a new administration that has certainly seems to be more capitalistic and more pro-business. Do you think Trump will be able to have any positive impact, anything that he can do to help?
Well, I think the only thing that's pro-business is the rhetoric. I really don't see much change in the Trump administration. To me, it's just more swamp creatures. I don't see any draining going on. Trump had a chance to try to do something to cut back on government spending, yet did nothing. They passed that ominous spending bill with his blessing, and they cut nothing. In fact, spending went up. Trump is not even really playing lip service to reducing the size of government, doesn't want to touch entitlements. All he wants to do is talk about tax cuts, but if government spending is going to grow, then there are no tax cuts. Even if there are tax cuts nominally, we have to pay for government somehow. And so if we don't pay for it through taxation, we'll pay through it through extra inflation, right? If the government has to print a bunch of money because tax revenues went down but spending went up, then the cost of living is going to go up and people are going to lose their tax benefits because the prices of things they buy are going to go up, maybe by more than the tax savings. And of course, it also will push up interest rates. So there is no real tax relief coming, because we can't have relief from government unless we reduce the size of government, and that's not going to happen. Meanwhile, Trump has made so many mistakes early on in his presidency, for no reason, that now he's mired in controversy. Now you're talking Watergate-type cover-up, obstruction of justice, impeachment. I mean, I think the markets got so far ahead of themselves on this idea that Trump was going to usher in this new era of economic growth and corporate tax cuts and personal tax cuts and deregulation. And none of this is going to happen. And meanwhile, Trump convinced the voters that he could solve their problems by the power of his own persona, that he could negotiate us back to greatness, and that, if we just had Donald Trump as president, everything would be fine. And that's not true. We have some deep structural economic problems that have been building up over decades as a result of the government and the Federal Reserve, and they need to be unwound. And they can't be unwound without some short-term pain. Yet nobody has prepared the electorate for the pain that is necessary to actually get the economic house in order so we can become a great country again. We can't make America great again until we burst these bubbles and restructure this economy. And the government can't do that. All the government can do is get out of the way and let the free market do that. But that's not happening. So we're headed for a huge crisis. The Trump administration is not going to change that. A lot of people are saying, Trump is likely to be the next Ronald Reagan. He's more likely to be the next Jimmy Carter, which is basically short-term placeholder between administrations of the opposite party. Because when Jimmy Carter was elected, that was after 8 years of Nixon and Ford, and the economy was in very bad shape. And so the public voted for an outsider, a peanut farmer who had very little, just 4 years as a governor of Georgia, but really an outsider to come and fix the country. And the country got worse. And then they went back to Reagan, which was a good thing. But now you have the opposite, where we have 8 years of Obama, where the country's a mess. And so people are turning to their savior in Donald Trump. Now the whole bubble is going to blow up on his watch. And I think it's going to get so bad that 4 years from now, we could be looking at President Bernie Sanders or somebody worse than Bernie Sanders.
Okay, got Peter Schiff here with us today, economist, author of The Real Crash, and the radio show host, and a entrepreneur of financial products companies. We'll be back here with more from Peter on what you can do to protect yourself on the Real Estate Radio Power Investing Program on KDOW 1220 AM. Stay with us. We'll be right back.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
So, Peter, what will What will it look like? How will we be able to tell when we're getting ready to crash, or will you not be able to tell until it's too late, so you better prepare now?
Yeah, well, I think it's more of the latter, that you got to be early. If you're too late, then you're out of luck, right? You have to do it in advance. But I think when you really start to see the dollar, the stock market, and the U.S. bond market all falling in unison, right now, usually when the stock market goes down, the bond market goes up,
Yep.
So you get some supports. But when people start to realize that this is a U.S. problem, that this is really a sovereign debt crisis, as well as a dollar crisis, because all bonds are, or all U.S. treasuries are, is future promises to pay you dollars. And if the dollar is collapsing, then what good are those future dollars? In fact, a dollar in the future will be worth even less than a dollar in the present. So when you start to see all the U.S. financial markets going and the price of gold really spiking, then you know that it's here. But of course, you don't want to be trying to protect yourself at that point. It's like, trying to buy fire insurance while your house is already on fire.
Right.
Maybe you'll be able to find a policy, but it's going to be damn expensive.
Yep. Well, if you were, so Peter, if you were czar, what would you do?
Well, I would do all the things that Trump really doesn't have the courage to do. I mean, all the things that are good economics are lousy politics, right? And all the things that are good politics are horrible economics. So nobody really has the guts in America in politics to do what's necessary, because, nobody wants to be the messenger who gets shot. And everybody wants to kick the can down the road. So, again, there are a lot of things that need to be done. I mean, people can read my book, The Real Crash, How to Save Yourself, America's Coming Bankruptcy, How to Save Yourself and Your Country, because I go over all the things that need to be done in that book. And it's a long list of things that we need to do. And it's more like undo. It's not like the government has to actually do things. The government has to undo the damage that it's already done. It has to remove itself from the economy. It has to repeal a lot of rules and regulations that have so screwed up the economy. And it has to unleash the free market to fix what the government broke. But, in the meantime, what people can do is protect themselves, right? They can buy some gold. I have a company, SchiffGold. We may have very good prices on gold. People can open up accounts at goldmoney.com. It's a great way to own gold that you can use in commerce. And eventually, anybody that has anything worth selling is going to want to get paid in gold. They're not going to want your worthless paper. So if you have a gold money account, you'll have gold that you can spend, and you can sell your products, your goods and services. If you work, you can be paid in gold. So you can open up a gold money account. That's goldmoney.com. My gold company is SchiffGold.com. And if you have a larger portfolio, you need to open up an account and work with at Euro Pacific Capital. The website is Europac.com, EUROPAC.com. Check us out. You can call us at 800-727-7922. That's 800-727-7922. And speak to a broker to determine which of my investment strategies is best for you. And if you're suited for the strategies that we have, I've got mutual funds that I run. I've got separately managed accounts. There is a solution that will work for your portfolio to both protect yourself and profit from the event that I see coming.
What are some of the kinds of products that Euro Pacific invest in?
Well, we invest predominantly in foreign stocks and bonds. So we look at the countries that I think are making the fewest mistakes, and I want to own assets in those countries because I believe that the assets will gain in value, as will the currencies relative to the dollar. And so we have various ways that we can do that. You can buy the stocks directly in a brokerage account. You can set up an account that I manage where I'll manage your portfolio of foreign stocks, or you can buy my mutual fund that consists of portfolios of foreign stocks that we manage. So you can have the individual stocks, or you can own my fund, which gets you into the individual stocks, which we manage. So, and our strategies are doing very, very well this year. We bottomed out in the first quarter of last year because the dollar had been rising based on the false expectations of prosperity and the false idea that the Fed had solved the problems. Well, now that people are starting to see that isn't the case, although there's still, most people still believe that everything is okay, but now they're going to find out that's not. In fact, ever since the Fed started raising rates, that's when our accounts started to rise. But I think once they have to cut rates again, that's when we kick it into a whole new gear. And so before that happens, I mean, people should, take advantage of the situation and set their accounts up.
I saw, I think on your one of your recent podcasts, they said things are getting so frothy. Even high-end, there's even a high-end shoe company that's now allowing debt financing for shoes. Well,
there's a lot of debt out there. Clearly, I mean, a lot of people are borrowing money And that's because interest rates are too low. The problem is nobody is saving money. So where's all this debt coming? Where's all this money coming from? It's being created out of thin air by the Federal Reserve. This all has dangerous implications for the future value of the dollar and our standard of living.
What are some of the characteristics of companies in countries that you feel are economically in much better shape than we are? What are some of the characteristics?
Well, I look for companies with good balance sheets, good dividends, good earnings growth, and in particular, I look at where their revenues are coming from, because I do believe that as the U.S. economy basically goes into this depression and as the dollar falls in value, Americans are going to consume much less than they have been in the past. And, because we've been borrowing to consume. And when we can no longer borrow and we've depleted our savings and we don't have the manufacturing, Americans are not going to be spending.
Are we going to lose?
The question is who's going to be spending? And I think you're going to see the emerging market consumer basically emerge and steal the spotlight from the American, because as our currency goes down and their currencies go up, they're the ones that are going to be doing the consuming in the future. The goods are still going to be produced. I'm not predicting the factories around the world are going to shut down. They're still going to produce stuff. It's just that Americans are going to be too poor to afford it because the currency is going to be too low. But then you're going to have a lot of people in other countries who are too poor to buy right now. But once their currencies rise in value, they'll be outbidding Americans for all that stuff. So I want to have companies that have customers in the countries that are going to be richer, not companies that are, dependent on consumers who are going to be broke. So it's very important, not only the revenue, but where the revenue is coming from. I don't want customers who are maxed out on credit card debt and have part-time jobs. I want a guy that has a lot of savings and that has a real job and that can afford to buy my products without taking out a loan.
All right, good stuff from Peter Schiff, who's on with us today. He's the president of Euro Pacific, and he's got a bank, and he's got SchiffGold, where you can buy metals to protect yourself against inflation. And we will have Peter back in just a moment for a little wrap-up and summary. So stay with us on Real Estate Radio Power Investing, KDOW AM 1220. We'll be right back.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Pete, do you think it's a good idea for people to hold some real tangible assets as well, such as real estate or maybe energy, agriculture, that sort of thing?
Oh, yeah. You want to own real things. You don't want to own paper. That is going to be the big problem. You don't want to be a creditor of a bankrupt nation that's about to crank the printing presses like it's going wild. And I do think, though, the more assets, the tangible assets that you can own outside the United States is even better because U.S. assets are going to lose value relative to assets in other countries. I mean, just like if you want to look at it, just locally, obviously, let's say you have a community that is getting more affluent where more people are having jobs and having better jobs, you would expect real estate in that community to be appreciating. Whereas let's say there's a community where a major employer has moved out, there's a lot of unemployment, clearly real estate in that area would be losing value because the pool of potential buyers or renters is being depleted. Well, the same thing internationally. If other countries are getting richer, then the real assets in those countries are going to be more valuable than in the United States. The States is getting poorer. So you want to really broaden your horizons and look around the world when you're trying to protect yourself from this coming crisis.
Peter, want to give again your contact information?
Yeah, my website for my brokerage firm is Euro Pacific Capital, Europac.com, EUROPAC.com, 800-727-7922. People can go to SchiffGold or goldmoney.com to buy gold from me and set up precious metals accounts. And don't forget, I do my own podcasts. I do several a week at SchiffRadio.com and on my YouTube channel. So just search Peter Schiff on YouTube and you can subscribe there. And I put out video blogs and a lot of other content because, I'm the real news. If you go to NBC, CBS, CNN, that's all fake news, right? If you really want to know what's going on, you got to listen to what I've got to say.
Well, I've been listening to you for years, and you've been calling things right. And thanks for all the education you've been giving the the public. I know a lot of folks today say, oh, yeah, they called it right, but you go back and look for it, and they really didn't. You go, let's see, if you go on YouTube and go for, listen to Peter Schiff called it right, something like that. You'll pull
Peter Schiff was right, yeah.
Yeah, and that, what program was that on?
No, that was just somebody put together a video that they took down. It had over a couple million views, but there are other copies of it. But that was just kind of like a montage of some of my appearances on CNBC and Fox News, where I was predicting the crisis, and everybody else that was on the same programs was just laughing at me.
Yep, they didn't want to hear it. Peter, thanks so much for being with us.
All right, Tom.
And I appreciate you taking the time to do that. Keep up the good work. We look forward to seeing you next time.
Bye-bye.
So Peter Schiff on with us today, talking about our economy, telling us things that maybe you don't like to hear, but you need to hear. And I hope you got some value out of that, because he has facts and strong track record behind it. So go to TomWilsonProperties.com, and you can sign up for our weekly newsletter that reports on things such as Peter's talking about that relate to real estate and real estate investing. Also, sign up for on that newsletter. You will get automatically part of our client base. Gives you access to syndications that allows you to, for $50,000 a share, to own office buildings, retail centers, industrial centers, for that normally only large institutional investors can afford. So always nice to have you with us. Thank you for tuning in today on Real Estate Radio Power Investing on KDOW 1220 AM. Remember, the only thing that matters is what you do next.